Well, good day, all. Ira Epstein with your metal market wrap-up, and this wrap-up is for Wednesday, the 21st of April, 2020. We're late, 7:20 p.m. I recorded this a lot earlier. I have pets. I love animals, and one of them walked on the keyboard, and I didn't realize it, and it turned off the voice. So as I'm recording, I did the recordings. I had to do them all over again. I apologize, but I love my animals. And they're here when I record. They're at my feet. They're all over the house. As you take a look at what's going on here in the stock indices, interesting day today. You needed a pop to keep them embedded. You got it. Now the question is, on a correction, can they keep it up? In the metal markets, all of the metals to me look in the bull camp. Maybe the exception should be platinum. It's pretty much neutral, but the others are all in the bull camp. The question on gold is how to get long and then keep it with the embedded reading. So we might as well go right to that. In the gold, one of the things we've been talking about for day in and day out was the market was down here, and I said, you know, if it rallies, I'm going to look for resistance back up at that 18-week moving average of closes. Now, this doesn't mean that I have powers that be, but you got to give me a little credit, I hope. You're right there, and that's where the market is stalled out. It didn't just fly by it. That's why gold's in an interesting spot. If gold can move away from it, maybe the combination of the question of reinflating economies is finally grabbing hold, and that was the washout. I don't know, but it's something to think about. We have failed each time we got up here recently too, so for the bears, they're probably making their stand right there. If you look at the daily bar chart, you can see how the markets come up and over them. By the way, up here I left this. This shows you, I don't do this very often, all the different tools in the charting software, and you can make these much bigger than I've got them there, and you can add, you set up on this charting software everything you want it to do. The pattern here is higher lows, higher highs. That is bullish. What about resistance and support? Well, the 18-day average was the key. You fought against it for a long time. If you do remember, I said you could have an inverted head and shoulder formation here. I hate chart formations. Don't write me on them. But if you had one, I could get a count that was up towards that 1820 area. Well, now it's refining itself closer to the 1806 area. Okay, I get that. Where do we see resistance? Well, on just moving averages, it's right here in the green line. That's the 100-day average. The 200 is way above the market at 1871.60. So I won't keep that on the chart very long. What I'll do here is blow it up with the Bollinger Bands. The Bollinger Band represents an algorithm that's designed to keep the market trading within it 95% of the time. 5% of the time, you can be out of it. Now, some people say, well, that 5% can come all at once, whatever. I don't believe that for a second. Go back and look at the charts and do counts. How many times you get over it and stay over it and start counting days, and you will come up to a number where you'll say, darn it, in the futures market, I'm not talking spiders and ETFs for this, God darn, he's got something he's talking about there. Okay, what's the other thing? Hitting that is a sign of strength, not weakness. So the question is, what other parts are at work? Well, we have the bias up because you're over the 18-day average. That's how I define bias. When you're under it, the bias is down. The bias filters the swing line. So if the swing line is up, but the bias were down, I think you have nothing. In this case, you've got the swing line up, higher highs, higher lows. You've got the bias up, and you're fighting into resistance. Even stronger resistance is 1804 to 1806.5. Then what rules the day, for me at least, is when a slow stochastic reading embeds. I came up with this on my own. I ran it by George Linn, who founded stochastics. He's the godfather of this. He's long gone. And I ran this by him, and he said, darn it, you got a twist on it that looks like it makes sense. That's all. I took it the rest of the way because I saw this happen so often where markets embed. Now, if you don't know what embedding is, take my charting course. It's on our website. I'm not going to teach it to you here. But you got that going on. Until the red line closes under 80, it tells me that the pros are buying on the breaks, looking for higher prices. As for the gold-silver ratio, well, you came back up and you kissed it the difference here the other day, 2 days ago, and now you're descending again. Remember, the lower the numbers go, what does that mean? Less ounces of silver necessary to get an ounce of gold in the perfect world. I'm not dealing in commission. I'm not dealing in any of the other stuff. We know what a silver ounce is. We know what a gold ounce is. I'm assuming apple to apple. Got it? In the silver market, you can see how you're running, and I'm going to be leaving the May silver soon. The volume is still here for the trading, so I'm following it. One of the things is we got up back here was I told you, let me get to that. When we started rallying, I said you're going to have resistance to 200 to 100 upper Bollinger Band, and what becomes resistance on the way up often becomes support on the way down. So you started fighting right away at the 100-day average. You went back to the Bollinger Band, and that's where you're at. Embedded reading possibilities up here, support back at these levels. Can't say it any easier. In the copper market, are we going to embed? We're not there yet. You're in an overbought market that is pushing out the upper Bollinger Band in an uptrend. But overbought is overbought, and many different techniques will look at an overbought and say, no, that's one of the checklist items against me. I'm not doing anything. So you have to decide what's your checklist. In my charting course, I make mention of that over and over. Here you got a higher high, lower low, then you come up and you got lower highs, but now you got a higher low. Do you see that? Lower highs, and I think you'd agree, higher low. You got nothing. I'd wait to see how this market develops. The strength is in the palladium, an all-time high today. And we talked about this. We talked about how it's needed in automobiles. Yet I saw that Ford today announced that they're still cutting back production of their F-150, that popular truck, because they can't get the silicone chips they need. But you can see the market just powerful because you're going to need what? You're going to need this product. What do you do with it? Emissions. Okay, in the dollar index, support 100-day average. You saw it before, the combination of the Bollinger Band in that. Market's still bearish, embedded reading. I think the pros are selling this market short. Ethereum, you got down twice to the 18-day average, hit the upper Bollinger Bands, had your reversal. But this bothers me. You're very overbought. Overbought is what to me? It's reasons not to do too much in a market one way or the other. Now, you heard me talk just a moment ago that not everybody is suited for self-directed trading. I think you realize that. If you don't, well, that's up to you. But the simple fact is the commodity markets with 90% leverage are on a good day difficult and on a bad day real difficult. The leverage is an enemy. I know people want that leverage. I had some of my clients writing me today that they'd like me to start covering for them the 2 and 3 times SPDR and ETFs. I'm not going to do it. You want that leverage? Step to my futures markets. I'll give you leverage. And by the way, those 2 and 3 times, they're still based on the full-size contract. Come on. My brokers will discuss with you market reports. Now, let me tell you, because I was talking over that. Each broker that's with me has 20x years, some of them 30 years experience and more. I'm in the game since 1969. Some of these brokers have been with me since the 80s. So I keep people, they stay for a reason, but they're capable of talking to you. And when reports come out, when you have trade ideas, you get up, you can't necessarily make your moves first thing in the morning. Well, you can work with them. They work with you. They try to help you develop a game plan. They can do different order types with you. They'll help you work that out. You're going to say to me the first thing, oh, the commission. Let me share this with you in brokerage, in futures. Unless you're an institutional trader, the commissions don't matter too much on the average account. How do I know? Been doing it 50 years. What matters is being right the market. That takes care of it. But we're sensitive to that. So they can set the commission depending how much time you need from them, how big of an account you're going to trade, not dollars. Dollars today mean nothing when interest rates are 0. What matters is how many contracts you're trading, because that's what they're going to be paid on. They don't share in any other fees. That's where they make their money. If you want them to follow my trade recommendations with you, they will. They'll call you on them. They'll do whatever you want. So the idea there is we get a program that experienced brokers talk to you about. How much of their time is it going to take? What's right for the size accounts you have for paying? And they take it from there. You'll be shocked that it's not anywhere near what you think it is. That's typically what I hear from the clients when they talk to me. So how do you get this all going? It's simple. It's a phone call, because you're going to have to talk to them anyways. You can call right there. If the time zones are such that you want to call and get a call at another hour, maybe late at night, could be anything, go to our website, fill out, you'll see free offers, the part there. They do call all over the world. I mean, they're at this to make a living. They're not going to call you at 3 in the morning. I'm the only one up at that hour. I guarantee it. I'm the only one up checking markets probably at 1 in the morning. But most people, they'll work it with you. All right? Hope you take advantage of it. I'm Ira Epstein. I'll see you tomorrow.